Ever wondered where the lines blur between a fintech company and a traditional bank? You see names like SoFi popping up everywhere, offering loans, checking accounts, investment options, and it makes you think, is this a bank? That's exactly what we're diving into today. Now, before we answer that directly, let's rewind a bit. For generations, the concept of a bank was pretty straightforward. You walked into a brick-and-mortar building, talked to a teller, deposited your paycheck, maybe took out a loan. These institutions were heavily regulated, insured by the FDIC, Federal Deposit Insurance Corporation, and played a central role in the financial system. But then came the internet, smartphones, and a whole new wave of financial technology, or fintech. Companies started offering financial services in new, innovative ways, often leveraging technology to streamline processes, reduce costs, and offer more user-friendly experiences. SoFi is a prime example of this. SoFi started out in 2011 as a student loan refinancing company. They connected alumni investors with borrowers, cutting out the traditional bank as the middleman. This peer-to-peer lending model was a key differentiator and allowed them to offer competitive interest rates. Over time, SoFi expanded its offerings significantly. They moved beyond student loans into personal loans, mortgages, and even credit cards. They also introduced checking and savings accounts, investment platforms, and financial planning tools. This expansion is what really starts to raise the question, are they becoming a bank? Here's the thing, SoFi is a bank, but not in the traditional sense you might first think. In 2020, SoFi acquired Golden Pacific Bancorp, a small community bank. This acquisition gave SoFi a national bank charter, meaning they are now officially a federally regulated bank. They operate this bank under the name SoFi Bank, N.A. This is a crucial distinction. Having a bank charter means SoFi is subject to stricter regulatory oversight than many other fintech companies. It also allows them to offer FDIC insurance on their deposit accounts, up to the standard $250,000 per depositor, per insured bank. This is a major advantage and provides a level of security for customers that isn't always present with non-bank financial service providers. So, the short answer is yes, SoFi is a bank. But it's important to understand the nuances. They are a modern, tech-driven bank that operates primarily online and through mobile apps. They don't have a vast network of physical branches like some of the older, established banks. Now, why did SoFi go through the process of acquiring a bank charter? There are several key reasons. First, it simplifies their operations and reduces costs. Before having a charter, SoFi had to partner with other banks to offer certain services, such as deposit accounts. This involved sharing revenue and navigating complex partnerships. By having their own bank, they cut out the middleman and have more control over their products and services. Second, it allows them to offer a wider range of products and services. With a bank charter, they can directly offer things like checking and savings accounts, which are essential building blocks for a full-service financial institution. Third, it enhances their credibility and trust. Being a federally regulated bank provides a level of legitimacy and security that can be a major draw for customers. The FDIC insurance, in particular, is a significant selling point. Fourth, it allows them to lend more efficiently. By holding deposits, they have a more stable source of funding for their lending activities, which can lead to more competitive interest rates for borrowers. However, just because SoFi is a bank doesn't mean it's exactly the same as your local community bank or a large national chain. There are still some key differences. SoFi is heavily focused on technology and providing a seamless digital experience. Their mobile app and online platform are central to their operations. They prioritize user experience and offer features like easy account opening, mobile check deposit, and budgeting tools. They also cater to a specific demographic, often targeting younger, tech-savvy individuals and professionals. Their initial focus on student loan refinancing reflects this. Their product offerings are also tailored to this demographic, with a strong emphasis on loans, investment products, and financial planning tools. They aim to be a one-stop shop for their customers' financial needs. Another key difference is their lack of physical branches. While some might see this as a disadvantage, others see it as a benefit. It allows SoFi to operate with lower overhead costs, which can translate to better rates and fees for customers. So, when you're considering whether SoFi is the right financial institution for you, it's important to weigh these factors. If you value a strong digital experience, competitive rates, and a wide range of financial products, SoFi might be a good fit. If you prefer the personal touch of a physical branch and face-to-face interactions, a traditional bank might be a better choice. It's also crucial to remember that while SoFi Bank is FDIC insured, investments offered through SoFi Securities are not. This is a standard distinction across the financial industry. FDIC insurance protects deposits in bank accounts, but it does not protect investments in stocks, bonds, or other securities. In conclusion, SoFi is a bank operating under a national bank charter as SoFi Bank, N.A. This means they are subject to federal regulations and offer FDIC insurance on their deposit accounts. However, they are a modern, tech-driven bank with a focus on digital experience and a specific target demographic. They offer a wide range of financial products and services, aiming to be a comprehensive financial solution for their customers. Understanding these nuances is key to determining if SoFi aligns with your individual financial needs. With that said, thanks for watching, and until next time.